We'd like to show you a possible future that could completely change a business. Imagine a Tesla that isn't limited by what the market wants and can act like a private company in terms of being quiet and quick. Gerber, who is known for being smart with money in the electric car business, made the bold prediction that Tesla could go private in less than 2 years. This has led to a lot of speculation. In today's episode, we'll talk about this interesting choice. What does it mean for Elon Musk, for Tesla, and for you as an investor? We'll talk about the effects, problems, and possible outcomes of this big change. We'll take a look at the CEO's office, the trading floor, the sleek interiors of Tesla cars, and the busy production halls. So take a seat and then click like and subscribe. This is Tesla Stock News, and this is where the story about Tesla possibly going private begins. Tesla, the winner in electric cars, is about to do something very surprising. It will leave public markets. Gerber, a finance expert, figures out what the signs mean and thinks this industry giant will have a great private future. A move like this could shake the very foundations of Wall Street. Now think about this Tesla. A company known for being innovative and a star in the electric vehicle market has gone from making just 100,000 cars a year to making over 2 million. This company is growing really quickly, right? Now I have a question for you. Is it smart to buy a Tesla for $200? Join us as we look into this question. Steve Wesley, who used to be on the Tesla board, is still optimistic about the company's long-term chances. His trust comes from Tesla's track record of coming up with new ideas and shaking up markets, especially in the electric car business. Although the third quarter was weak, Wesley is still optimistic. This is something that investors and experts often worry about. Tesla said in the third quarter that both production and shipping would slow down. This was not just a case of underperformance, though it was a planned move. During this time, Tesla said it was going to temporarily stop running its business. There were two goals for this slowdown. First, it made factories more efficient, and second, it gave the popular Model 3 car a big makeover. In the fast-changing EV business, making things more efficient is especially important. To stay ahead of the competition, you need to keep coming up with new ways to make things and designs for products. By making factories more efficient, Tesla hopes to cut costs, speed up production, and improve the quality of all of its products. These are important parts for long-term success in the car industry. The Model 3, one of Tesla's most important goods, got a makeover that shows the company's committed to always getting better. The Model 3 has been a huge sales driver for Tesla because it costs less than the company's earlier models. A wide range of customers are interested in buying it. The goal of this car's update is possibly to make it even more appealing by adding new technologies and listening to what people have to say. Wesley is optimistic about Tesla because the company has a history of getting through tough times and coming out better. Whether it's dealing with legal issues, problems in the supply chain, or production delays, Tesla has always been determined and flexible. Tesla is set up for long-term growth thanks to its adaptability and clear goals for transportation. It's important to keep a close eye on the recovery in Q4. But there's more. Gerber made a shocking prediction Tesla will go private in 2 years. This could totally change the way Wall Street works. This situation is ready for a full discussion of Tesla, including their most recent earnings reports, problems with their margins, and a lot more. We'll have Steve Wesley from the Wesley Group and MDB from Gerber Kawasaki Wealth and Investment Management with us. First, let's ask our viewers a direct question at $200. Is it smart to buy Tesla right now? Even though the Cybertruck is having problems right now, MDB is optimistic about Tesla's future. Tesla wants to completely change the auto business, which has never been done before. It's a good idea to build or keep your stake in Tesla when the stock price goes down, right? The Cybertruck has gotten a lot of attention for its futuristic look and reports of great performance, but it has also had some problems. These problems include things like delays in production and worries about whether the market will accept its unique style. Even with these issues, MDB's optimism highlights a key part of Tesla's strategy, its willingness to break rules and push the limits of what's possible in the car industry. With its huge goals, Tesla wants to change everything about the auto industry, from the focus on electric cars to how it handles software updates and self-driving features to how it looks into integrating green energy. The company has always tried to change things the way they are. Because it is always looking for new ways to do things, Tesla has set itself apart from other standard manufacturers and become a leader in the move to environmentally friendly transportation. Knowing this, MDB suggests that buyers may find good chances to make money when Tesla stock goes down. It's normal for the stock market to go up and down, especially for a company like Tesla that is very busy and well-known. These drops might not always be a sign of a problem with the company's long-term chances. Sometimes they are just how the market is temporarily reacting to certain problems or the state of the economy as a whole. Stock price drops may make it easier for investors to get into the company or give those who believe in its vision and ability to carry it out a chance to strengthen their place in the company. People who are willing to invest for the long term will find this point of view particularly useful. It stresses the company's ability to grow and dominate in a future where electric vehicles and renewable energy are becoming more important. When we look at the most current report, there seems to be reason to be alarmed. In spite of the fact that the Cybertruck was having problems, Elon Musk, who is usually full of energy, seemed a little worn out and down. Is this just a way to draw attention away from other problems like Musk's use of Twitter, or does it show what's really wrong at Tesla? Tesla's CEO Elon Musk sent out a tweet in 2018 with a plan to take the company private at $420 a share. This caused a lot of buzz in the financial world. After this statement, there was a lot of speculation, and market officials kept a close eye on it. Many people kept wondering if the idea would come back even after it was no longer popular. Now, the big question is Tesla about to do something completely new that will change the way it does business? Watch out, because this could be a big moment in Tesla's life. Think about how a change that could make Tesla's future totally different would affect things. If the stock market didn't have to make choices all the time, Tesla would be able to make decisions very quickly. Ross Gerber is a big supporter of Tesla. He believes that the company could be protected from short-term market changes and the constant pressure to meet quarterly goals by becoming privately owned. The reasons for this view are based on several significant facts about the public market and Tesla's unique position within it. To begin, companies that are sold on the stock market are always open to the ups and downs of the market. There are many things that can cause these swings, which often show short-term thinking. These things include investor sentiment and more general economic trends. These ups and downs in the market can be especially bad for a company like Tesla that is on the cutting edge of green technology and energy. Tesla's stock price has gone up and down a lot in the past due to news, speculation, and investors' moods, which don't always reflect the company's real success or long-term prospects. Gerber thinks that Tesla might be able to avoid the short-term changes in the market by going private, since Tesla's long-term goals, such as raising production, improving technology, and growing its market presence, would not be affected by changes in the stock price. The company could focus more on these goals. While the media and public market investors aren't constantly watching, public companies are still required to report on their financial success every 3 months. Shareholders, experts, and the media all look over these reports very carefully, which often makes people focus on short-term results instead of long-term planning. Tesla is a forward-thinking company that is always spending in research and development, building out its infrastructure, and looking for new market opportunities. It might be hard for them to show steady quarterly growth. Also, it might not always fit with its long-term goals for growth. Gerber says that Tesla might not be as focused on meeting these regular goals if it were a private company. For the company to commit resources and make choices that might not have an instant financial effect, but are necessary for long-term growth and keeping its competitive edge, this could be possible. People who follow publicly traded companies like analysts and shareholders pay close attention to everything they do. Tesla could avoid all of this by getting private. What else might this change be good for, though? What changes might it make to the price of Tesla stock and help investors? Tesla is no longer limited by the ups and downs of the stock market now that it is privately owned. Instead, it can focus on long-term strategy goals and breakthroughs. It would also make rules easier to follow, which would let Tesla put more money into research and development. As a private company, Tesla could also make more strategic decisions fast and in secret, which would give them a big edge in the crowded EV market. Activist investors often put a lot of pressure on publicly traded companies to make choices that may not be in their best interests in the long run. Privatization would keep these things from distracting Tesla. Also, Tesla wouldn't have to constantly make public investors happy by getting large amounts of money from institutions or private investors for growth and new ideas. Now, let's look at what might happen to Tesla's shares in the long run. Tesla will be able to focus on long-term goals without being distracted by daily price changes once the company goes private. By keeping Tesla's stock safe from speculation and short-term market changes, Elon Musk and the rest of the company's leaders would have more freedom and control to make choices if the business were to be sold. This freedom from